$1,065, 60 minutes, one session. And I'm going to show you exactly how I did that in this video and the 4-step process behind it that I use every single day. How many times have you looked at the chart? The setup was there, everything looked right, and then it just didn't work out and it went the other way. And you sat there thinking, what did I miss? You didn't miss something on the chart. You missed what was happening underneath it. And that's the difference between guessing and gambling and knowing exactly when to enter. And that is exactly what I'm going to show you in this video. The 4-step process that took me from failure to funded and full-time. Okay, so welcome back. So in this video, I'm going to be going over a trade I took on the 10th of May or 8th of May as I took it. So this trade made $1,065 using the 4 basic steps that we use at Price Action Labs. So that's positioning, price, proof, and precision. And this trade, I'm going to break down an ES long using those 4 exact steps. So let's get into it. So before I go into that, I just want to talk about the 3 biggest things that you're probably facing right now as a trader that's quietly costing you money. Now, so the 4-step process I've made is designed to tackle all of these individual problems. So step 1 is the hesitation loop. So the hesitation loop is you wait for more confirmation than you need to, because I've seen recently a lot of traders have good confirmation, but they don't feel confident. So at the end of this video, you're going to have a 4-step checklist that you can use every single day as an SOP to make sure that you're trading with the correct confidence, confirmation, and clarity. So you don't need more confirmation, you need more confidence. And that's something we're going to use to break the hesitation loop. So once you're convinced that the move has happened, it's typically already gone. So we want to break out of that cycle, right? The second problem is that you see A+ setups and you take A+ setups, but when you look back and journal them, they don't always look like A+ setups. So in the moment, the trade looked good, but in reality, it wasn't actually an A+ setup. So you end up taking trades that are close enough to being an A+ setup, but in reality, they're not really A+ setups. And so what we're going to do is we're going to use a mechanical process to help you dilute the noise to give you better clarity. So a flat week or even red week could have been avoided if you stayed away from the trades that look like A+ setups, but in reality, they were not. And the final thing is, it's the feeling that there is a missing piece in your trading. So recently I was talking to a few traders who they have good strategies. They're using either ICT, smart money concepts, other indicators which do work and don't work. And so it kind of feels like you're trading a little bit blindfolded, or the target or the goalposts keep moving. So it feels as if there is a missing piece that really you need to bring everything together. And so that feeling basically can be fixed with a few basic concepts. So when something doesn't click, it's frustrating. But when you don't know what it is that needs to click, it's even more frustrating. And so in this video, what I'm going to do for you specifically is break down a 4-step checklist or an SOP. So you're grinding consistently, maybe it's through prop firms or funded or your own personal capital. You're going through what I call the fatigue cycle. Some weeks you're up, other weeks you're down, and you're not really able to sustain the profits that you want. So full-time trading is typically one skill, right? Trading is a skill, but there's a missing piece to your trading. So these are the 3 common problems that I see with traders. I mean, I'm the founder of Price Action Labs. I work with traders all across the world, 250 plus traders at this point. And these are the 3 problems I see in 2026 that are holding traders back. The hesitation loop, having good confluences but not being able to pull the trigger at the right time. There's a process to overcome that. Setups that you take which seem like A+ setups, but they're not really A+ setups. So I'm going to use this video as a perfect demonstration to show you what an A+ setup looks like, in my opinion, and how you can use the checklist to do so. And finally, it's being able to crack the feeling of a missing piece, right? Why do you feel like you have a missing piece in your trading despite having a checklist or a rule list? So in this video, I'm going to be breaking that down in a lot of detail. So the process that I use every single day is this, right? The premium footprint execution.
If you're watching this right now and you understand the concepts, but you feel like there's a missing piece to the puzzle and you want to perfect it, I've made the process before profits guide. It's completely free in the description. Go and grab it. And if you're at the point where you want to build this with me directly, one-to-one, I work with a few traders directly at Price Action Labs to help them achieve just that. So there will be a link in the description or in the comments to apply for a free one-to-one acceleration call. If that's a good fit, I look forward to seeing you there. Back to the video.
Process. And so this is essentially the 4 pillar process, or the 4-step process that I use at Price Action Labs to help me go from positioning the trade at the right level, finding the correct price, so actually reading price and reading the footprint charts, then understanding who's in control, so seeing real market proof, and then using these 3 to then execute with precision. And once you have a precise entry, you then go back to finding a level, and around we go. So this is a 4-step mechanical process, or I call it the 4 P's to profitability, that I want you to use. And at the end of this video, you're going to have a step-by-step blueprint in order to do so. Right, so let's get into it. The first is about positioning. And so what I often say to every trader that I work with is defining your key level is the highest leverage activity in your trading. So key levels are the most important thing. Those who know me, those who know how I trade, I speak about key levels probably more than anyone else. And the reason for this is because if you can define where your key level is, you will stay out of probably 90, if not 100% of your losses. So the biggest problem that I often see with traders is that they take trades without defining their key level. The secret to a key level is that you want to define it before the market even opens. And in this video, I'm going to show you how I exactly find my key levels using a 4-step process, because this is the highest leverage activity. And just a quick tip on this, you want to have your key levels defined before 9:30 Eastern. So if you trade ES and NQ or options or S&P 500, NASDAQ, any US stock market which opens at 9:30 Eastern, you want to have your levels well defined before 9:30 Eastern. And I'm going to show you a 4-step process on how to do that. And that 4-step process I call the 4-step positioning process. So the word step is an acronym. And so, like I said before, defining your key level is the highest leverage activity in your trading. If you can get your key level right, this will save you probably close to 100% of your losses. So all those psychological problems that you're probably facing or you have faced in the past, FOMO, fear, hesitation, revenge trading, over trading, blowing accounts, blowing prop firm accounts, all of this can be stemmed from having a checklist on where to trade from. Because typically, if you look at my charts over here, I only had one level on Friday the 8th of May. Now, that one level meant that I was not allowed to trade anywhere else. So imagine if you had a checklist that you could literally close off all areas of the chart except for one area. That would save a lot of your losses. I'm sure you'd agree. And that's why key levels are the highest leverage activity to your trading. And so how do we find key levels? We find key levels with a 4-step process: finding market structure, then identifying targeted liquidity, then spotting equilibrium, so that's premium and discount, and then understanding price imbalances, otherwise known as fair value gaps. And what you'll notice is that these 4, the beginning letter of all 4 spells STEP, step. And so this is the 4-step positioning process, and it is the highest leverage activity you can perform in your trading. The 4-step positioning process. The next thing is price. So that's the second P. And so I have something which I tell all traders that I work with is those who trade without order flow will end up paying those who do on a long enough time horizon. Now that bit on a long enough time horizon is important because you may not believe this now, but in a year, 2 years, hopefully not in too many years, you will realize that if you're trading without order flow, you're an ATM machine for those who are trading with order flow. Okay, so this is the footprint charts and this is order flow. And so this is the simplest way to trade. The reason it is the simplest way to trade is because you are trading directly off buy and sell orders at a specific time at a specific price. So in other words, you do not need to use lagging indicators, ICT concepts, smart money concepts. You don't need to use lines. You don't need to draw trend lines. You don't need to draw support and resistance. You yourself do not need to do anything other than following a 4-step mechanical process. How you enter and how you find your levels will come down to order flow, right? Because those who use order flow will be paid by those who don't on a long enough time horizon. So there's nothing else you remember. Just remember, footprint charts are easy and simple with a process, and if you don't use them, you will end up paying those who do. Now, the next is so this is what we call the real-time reading blueprint. So in order to actually read price, because I often speak to traders, they say, oh, I trade price action. So when I ask them, I say, so what do you do to read price action? They mention things like support, resistance, supply, demand, trend lines, even indicators, right? Price action specifically refers to the bid and the ask, and it's the order flow. So how do we read price action? So READ, the real-time read blueprint. So you want to recognize the bid and ask. You then want to evaluate the delta. You want to assess aggression, and you want to detect zeros. So this is what I call the real-time read blueprint, or the real-time reading blueprint. So why have I called it that? Now, when you are trading the markets, right, when you're looking at this chart over here, it's important to understand the only time frame that you need to master is the now time frame. So I got this from one of my mentors in the United States. He said that the only time frame you want to focus on is the now time frame. Because one question I often get from traders is, what time frame do I use the footprint charts on? Now, if you want a very technical definition, I use the 1 minute time frame for my executions because I'm a scalper. So the $1,065 I made, that was through 1 minute execution in less than 20 minutes. Now this applies to the 1 minute time frame, the 3 minute time frame, the 5 minute time frame, the 10 minute, the 15 minute, all the way up to the weekly time frame if you swing trade, right? The time frame itself is not important. What's important to you as a trader is to understand whatever time frame you're looking at, you only want to focus on real-time order flow in the now. So if you're taking a trade at 18 past 10 EST, you are only focusing on the order flow at a specific level at 18 past 10 EST. Right? So the only time frame that matters is the now time frame. So what you're looking to do is recognize the bid and ask, and I'm going to go over how to do that. You want to evaluate the delta, assess aggression, and detect zeros using the real-time reading blueprint, right? So this is what the trade looked like, or this was the pre-market plan. So notice how we've got our key level. That was from the pre-market plan. So that's the highest leverage activity. So definitely get your key levels down. I'm going to show you a 4-step process on how I find my key levels. Once you've done that, you then want to read the price action inside of the key level. So in other words, this was ES on the 1 minute time frame. And what I've done is I have analyzed my key level between 9 and 9:30 Eastern. Right? And specifically what I've done is I've looked at the order flow. I've read the price action inside of the level. Now, the reason I went long on Friday the 8th of May, this was one of the biggest reasons why. So I'm going to go into why later. But if you've watched any of my previous videos, you will remember and understand that when you see red, it represents aggressive sellers and market went higher. So this is a rejection of sellers. So we're going to go into how to spot rejections. But just for now, understand you want to position yourself. So key level. You then want to read the market in the real time. So you're using the real time read blueprint in order to do that. So what do we mean by read? It's exactly what we see over here. So recognize bid and ask, evaluate the delta, assess aggression, detect zeros.
I wasn't always trading this way. So I want to give you a quick story that represented me in probably year 3 or 4. And what I found was I was struggling, not because my levels were wrong, but because I was entering off the wrong candle. And the reason I was doing that is because I was missing one thing, the liquidity absorption. So at Price Action Labs, I focus a lot on order flow and footprint charts to make sure that you can enter with the exact candle and the exact confirmation. The thing that changed everything for me was getting off the chart and actually reading the candles and data beneath it. When I stopped guessing and started predicting, everything shifted. And I've watched the same thing happen for probably over 100 traders at Price Action Labs. Using the order flow premium footprint execution process, they were able to get massive difference in their results. So if that's something that interests you, feel free to book a call either in the description or in the first comment, and I look forward to seeing you there. Back to the video.
Getting into the charts right now, this is the 15-minute time frame on ES futures. I'm going to show you how I use those 4 Ps we were talking about to take this $1,065 trade on Friday the 8th of May. So breaking things down, let's first go through our first process. So our first process we had was, if you remember, let's go back to here, was positioning. Right, so how do you position yourself as a trader? Right, so positioning is very important because we are now going to use the four-step positioning process. So always remember what we had here. This was our 4-step positioning process right here. Okay, so what we're looking at is structure targeted liquidity, equilibrium, and price imbalance. So if we look at this right now, let's actually break it down. So on Friday, we actually had the move from here to here. So what we're looking at now, so if I just get rid of this, let's break this down. So on Friday, I had my key level over here. So the question is, how did I find that key level? So I'm really going to break this down so that traders can understand it. So the 4-step process has, as the name suggests, 4 steps, right? So we look at structure, we look at targeted liquidity, we then look for an equilibrium, right? And then we look for a price imbalance. And so this is what we call the 4-step positioning process. Okay, let's start with market structure. So how do we actually define market structure? So I've got my market structure defined on the screen already, right? So hopefully you can all see this is pretty self-explanatory. This is like the basics of trading, right? So structure high, structure low, structure high, structure low. You know, for me, this was my high on Thursday and this was my low, right, going into Friday. So when we look at this, you know, in this way, what we want to try and understand is, you know, we want to follow this, we want to follow the checklist exactly. So if you're missing one of the 4 concepts or you haven't applied them correctly, then you're setting yourself up to lose, right? Very important. A couple of things with structure to understand is you want to look for these sharp moves up and these sharp moves down, right? Sharp move down, sharp move up, right? Sharp move down, sharp move up. So every move should be a V or an inverted V, right? And each pullback has to have at least 2 candles, right? At least 2 candles, at least 2 candles. This is also important to identify. So once you've gone through structure, right, you can put a tick through that. So now we've done structure. Now we want to understand targeted liquidity. Now, targeted liquidity is a fancy way of saying where is the most recent low and where is the most recent high. We're only interested in those 2 specific liquidity areas, right? Those are the targeted liquidity areas. So what we look for is on Friday going into the session, this was our targeted high and this was our targeted low. So these are the only 2 structural points we're interested in. Right, so that's a relatively simple one to understand. Now, after S, we move on to T, right? After T, sorry, we move on to E. So E stands for equilibrium. So what you want to do is once you've got your targeted liquidity, you simply want to project the fib, right, from the lows or from the high, sorry, down to the low. Or if you like, same thing, right? You can project it from the swing low up to the swing high. And so what this E stands for is this is the equilibrium. Right, this 50% here is the equilibrium. So for those who trade any kind of concept, this is maybe similar to ICT or smart money concepts. It is basically premium and discount. Now, this is why this trade is a little bit more complex, but it shouldn't be too complex. I'm going to break it down.
I want to be real with you for a second. I wasn't always trading this way. So I want to give you a quick story that represented me in probably year 3 or 4. And what I found was I was struggling, not because my levels were wrong, but because I was entering off the wrong candle. And the reason I was doing that is because I was missing one thing, the liquidity absorption. So at Price Action Labs, I focus a lot on order flow and footprint charts to make sure that you can enter with the exact candle and the exact confirmation. The thing that changed everything for me was getting off the chart and actually reading the candles and data beneath it. When I stopped guessing and started predicting, everything shifted. And I've watched the same thing happen for probably over 100 traders at Price Action Labs. Using the order flow premium footprint execution process, they were able to get massive difference in their results. So if that's something that interests you, feel free to book a call either in the description or in the first comment, and I look forward to seeing you there. Back to the video.
Price imbalance, right? You're looking for a price imbalance. Now, what that means, a price imbalance is basically a fair value gap. And here's a quick tip when it comes to finding fair value gaps. You don't want to look for every single fair value gap. You're only looking for fair value gaps that are close to previous day highs or previous day lows. So from here, we actually had one on Wednesday. Right, so this was from Wednesday, this was late in the day on Wednesday, right? So there was the price imbalance right there. So I get a lot of questions about how I find key levels, and so I will use the candle before the imbalance right here, and this is going to be my key level, right? Those are the 4 steps to finding key levels, right? So that's sort of the main bread and butter to finding key levels. What I look for is I look for market structure, I look for targeted liquidity, I look for equilibrium, and then I look for my price imbalance right here. So once I've gone through the 4-step positioning process, I am confident that I've got my key level. This is the key level that I'm looking for, and vice versa, this key level and this key level. All 3 of these key levels came from the 4-step positioning process. Okay, So I just wanted to make that, very clear so that people can understand. So let me clear the charts and let's quickly go over this. So once you've got your key levels, right, what's the next thing we're looking for? So again, if we go back to our presentation, if I go back to the presentation, right, once we've gone through positioning, we've got our key level, we now want to move on to price. We want to go on to reading price action. And so I was live in school, so this was the execution for that particular day, right? This was the actual execution. This was the profit, 1068.7, and this was the actual trade itself. So I took off, 1.8R, and then I closed the entire trade at 2.5R. So roughly about a 2R risk to reward, 1.8 to about 2R risk to reward, right? Roughly this sort of area. Then I watch price fly without me, which is just, I'm sure you've had that as well, right? We as traders are never happy about the outcome of any trade. If we make money, we wanted to make more money. If we lose money, we didn't want to lose the money. So we're never happy, right? So we want to kind of build processes, and we want to build SOPs and checklists so that you are, I guess, quote unquote, happy with the position. And how we do that. So I want to introduce you to the SOP that I use at Price Action Labs, right? So I've said this one sheet will change your life. If you use it consistently, it will. So this is sort of the process we want to follow. So let me quickly go through this with the traders. So let's see, right, let's break this. Let's quickly bring this up. If we go here, there we go. So this is the positioning process that we use, right? So let's bring this here. So this is what we call the 4-step process. So what we're looking at now specifically is this, right? We are looking at, if I bring this down over here, remove. There we go. So what we're looking at here is specifically the 4-step positioning process. So structure, targeted liquidity, equilibrium, and price imbalance. So once I've done all 4 of these, I want to then mark that out of 20. And I encourage every trader to download this checklist and use this checklist, right? You want to understand where is your market structure, right? So we've been through structural highs and lows. So we can tick that off out of 5, right? So that's 5. Targeted liquidity, we've understood most recent high, most recent low coming into Friday's position, right? So that would be a 5 because we're super clear on where the targeted highs and lows are. Where is the most recent high and low? Then equilibrium, right? It's very simple where we have an equilibrium here. So this is the structure high, this is the structure low. Anything above the 50% becomes a premium, anything below is a discount. So that's what the E stands for, equilibrium. And the final thing is price imbalance, and that's what leads to our key levels. And so we have identified a price imbalance here. We also had one here, we have some here, and we also had one down here as well. So these are all of our price imbalances, right? So I know I've gone through that quickly, right? I'm just going to become clear later on in the video, but we've essentially gone through the entire checklist. And because we've gone through the entire checklist, each of those are 5, the overall score for your key levels or your 4-step positioning process would be 20, or that's how I graded it on Friday. The reason I want you to follow SOPs and checklists is because this is the only way to actually become profitable. Having a 4-step system that you can repeat every single day, you can use that to journal your trades every single day, and from there you can make minor improvements towards your success, right? So once we have our key level, we then want to understand positioning, right? Or not positioning, we then want to understand price action. So this kind of large move over here, I'm going to be breaking it down. So
I want to be real with you for a second. I wasn't always trading this way. So I want to give you a quick story that represented me in probably year 3 or 4. And what I found was I was struggling, not because my levels were wrong, but because I was entering off the wrong candle. And the reason I was doing that is because I was missing one thing, the liquidity absorption. So at Price Action Labs, I focus a lot on order flow and footprint charts to make sure that you can enter with the exact candle and the exact confirmation. The thing that changed everything for me was getting off the chart and actually reading the candles and data beneath it. When I stopped guessing and started predicting, everything shifted. And I've watched the same thing happen for probably over 100 traders at Price Action Labs. Using the order flow premium footprint execution process, they were able to get massive difference in their results. So if that's something that interests you, feel free to book a call either in the description or in the first comment, and I look forward to seeing you there. Back to the video.
Move on Friday, which I was able to catch a decent chunk of it, but we want to break down what was going on inside of our level, right? So this is going to be now the majority of where the focus for the rest of this video is going to be, right? So when I trade, I have a couple of rules. I typically never trade the first 5 minutes. So let's break this down. 9:30 to 9:35, I will never ever trade those first 5 minutes, right? I never trade the first 5 minutes ever. Even if the setup looks A+, I never trade the first 5 minutes. Usually, I don't even like trading the first 15 minutes, right? 9:30 to 9:45, definitely 9:30 to 9:40 is the market basically warming up, right? The information is key, but how you use it is even more important. So let's break this down. So let's actually fast forward, right? So we have the first sort of 10 to 15 minutes over here. So this is now 9:30 all the way to 9:34, 9:30, 9:40, right? So we are focusing on the price actions here, right? Specifically, this is the first 15 minutes. So what we can see here is the first 15 minutes gives us a pretty clear breakout. So that's 9:44. There you go, 9:45, right? So this is where we use order flow, right? So the way I want you to think about order flows like this. In fact, let me quickly get out my let's quickly get out the image. So if I go to here, if I go to signature system, so how are we looking to read order flow, right? This is how it works. So we want to understand the bid and ask, right? That's what the R stands for. So READ, this is the 4-step process that we're going to use, right? And so the 4-step process, we want to read the bid and ask, we want to then evaluate the delta, we want to assess aggression, and then we want to detect zeros. And this is the 4-step process we use when it comes to reading price action, specifically reading key levels inside, reading price action inside the key levels. And so this is how we do it. Okay, so let's do this, right? Let's take out our SOP and let's see how we do this. Again, this is what traders use live when they're trading. So if you want to read the market or understand what it's doing, you want to go through these four boxes, right? So recognize the bid and ask. Notice how this spells out READ, read. So you're reading price action. You're not trying to predict it or guess it or try and gamble off it or do anything. Use indicators. Throw all of that in the bin. All you want to do is read the price action. It's very simple. So the first thing is you want to recognize what the bid and ask actually is, right? It doesn't matter if you've been trading order flow for 10 years. It's very important, or it's very useful in my opinion, for you to actually remind yourself every session of what reading price action means or what it does. So when you recognize the bid and ask, right, what this means is you're reading the numbers here, right? So the left number and the right number, right? What do they represent? The bid is aggressive selling. Don't forget that. The bid is aggressive selling, right? The ask is aggressive buying. So we have aggressive selling versus aggressive buying. Okay, fantastic. So we want to identify where the bid and asks are, or what the bid and ask represents. So what I mean by where is you want to be reading the bid and ask inside of your key level. So a common question I get with traders is they try to look at the delta or the order flow in every single candle. Don't do that. It's a big mistake. When I said that refining your key level is the most important thing, I want you to make sure that you have the right key level and you're only reading order flow inside of that key level. So specifically, you see a screenshot of price in my key level here, and again in the key level over here. So that's what we mean by identify where the bid and ask are. You're using the bid and ask inside of the key level. And so we have a very clean representation of what the bid and ask represents. So for me, if we were to grade this out of 5, it would be 5, right? Now let's move on to evaluating the delta. This is what the E stands for in the READ acronym. So evaluate the delta basically means who is more aggressive, right? So E and A come together. But if we look at delta specifically, right, what does delta represent, right? Delta here represents the difference between the ask and the bid. So in other words, if you have a negative delta, so for example, here we see 37 and 261. So you do 37 minus 261. That's obviously a negative delta. That's a very, negative number. It's about minus 200 something, right? Minus 230, whatever it is. Whereas if you look here, for example, this number here, this is 311 for 229. So if you do 311 minus 229, that's going to be a positive number. Therefore, when you evaluate the delta for specific candles inside of specific levels, you're using the ask and the bid to give you that delta. Delta is very important. Delta is super important because you then want to move on to step 3, which is assessing the aggression. So I just want to make one thing clear. If you are trying to trade a key level and you have no idea who is aggressive, or you don't know where the delta is, then you unfortunately are gambling. Right? I want to try and move you away from a gambling trader to actually being profitable, right? Actually passing prop firms, actually taking out payouts. If you have a personal account, actually making $500 to $1,000 per day, right? Actually replacing your job, right? Actually doing all these things, right? You do not need a complicated system. You need a 4 or 3 or maybe 5-step system. I use a 4-step system myself. In order to make this system work, or to make any system work, you need to have order flow backing it up. This is the most important thing. If you don't have order flow backing up your setups, you are gambling, right? You're literally gambling. You cannot read liquidity through ICT concepts. You're not smart money just by marking out a PD array. Indicators are all lagging. Drawing lines, you're better off drawing a picture than drawing anything on the charts, right? You have to understand what the delta is. You have to understand it. Aggression. And the final thing is you need to understand where the zeros are. This is very important. Inside of your key level here, now specifically here, because this was the main candle that allowed me to pull the trigger. If you're trading a key level, looking for a 0 is probably one of the highest leverage things you can also do as a trader, as well as your key level. Because when you see a 0 on the opposing side, that's what the D stands for, right? So if you look here, for example, D stands for detect 0. And we've gone through the entire real-time reading blueprint. So in the now time frame, in the real time frame, in the real time, what am I doing to read price action? Well, I'm looking at a few things. Delta and zeros are the main two that stick out here. And so what we can see here is we can see a lot of negative delta or a lot of red delta. Red delta means there's more aggressive sellers than aggressive buyers. That is what the price action is telling me, right? The price action is telling me that inside of my level here, inside of my level here, here, all these areas, we have zeros. So if you are trading or trying to look for a reversal, you're trying to look for a good trade, and you don't have any idea of where the zeros are, again, I hate to break it to you, you are gambling. Good. So I just want you to kind of think in that frame. Now, once you've gone through that, so we've gone through now the real-time reading recipe or the real-time reading blueprint, okay? Now, the next thing on the SOP is the trap filter or the trap execution framework, right? This works hand in hand with the bolt breakout blueprint. So what I'm going to do is I'm going to skip the trap framework or the proof, and I'm going to kind of combine them together. So if we look at the bolt breakout blueprint, this is essentially how I executed this trade, right? This is one of the most powerful things that I think I've developed at Price Action Labs, right? So it's essentially a 4-step system to help you execute. So this is where you have to be, very kind of, you need to keep your eye, you need to have your kind of eyes on the pulse here. So first 5 minutes, we let the first 5 minutes pass. So this is now 9:35, 9:36. Okay. So what we're seeing now, let's kind of break this down in real time. So if we go back to our price action here, let's quickly break this down. So here we go. So let's break this down here. So what do we see here? Right? What do we see here? So we can see here these candles here. So 1, 2, 3. So this is 9:30, 9:31. We see the market pulsing higher, right? We see the market expanding higher. Now, what's going on here is what we can see is a lot of negative delta here. So red delta, and even here red delta. This candle here is very interesting, this green candle. All right, let's break down this green candle. So this green candle here, 9:31, is this green candle here. What do we see? This is my favorite part of order flow, and it fascinates me to kind of break this down every time. We see a green candle, right? This is a green candle. But when we look inside the green candle, we see a ton of aggressive selling. Right? So when you learn how to read the price action, you can actually spot a strong move or a real move from a fake move. And this is how you do it. This here is a green candle, which obviously means higher prices. But what's really going on is there are sellers here which are trapped, right? These are trapped sellers. So the trap framework, this is how it works. So we're looking for trader reactions at price. And specifically, you want to look at the red delta here. So this is kind of what we're looking at. So I'm going to try and make this very, very simple for people, right? Because people often say I overcomplicate things, so I want to kind of break it down. What do you see here? So this number here is so red, I can't even read it. I'm going to say that's 440 for 200. You know, let's just say 440. Let me just write that down. 440 for 200. Okay, that's what it says here. So what does this mean? What does this 440 for 200 actually mean? So it means there's 440 aggressive sellers and there's only 200 aggressive buyers. And so when you see that and you see this big move to the upside, what it basically means is there is all these sellers here which failed. That's why price moved higher, right? So what's going on here is that there are actually passive buyers in this level, this key level that we defined 15 minutes ago. There are passive buyers stepping here, so buyers are in control at this level. This means you want to be buying inside of this key level. Okay, awesome. So if you can understand that, you're probably ahead of 90% of traders, or even 100% of traders, because most people don't even trade with order flow. Okay, now this here, super important. So what I'm going to break down now is the Bolt breakout blueprint. So I want you to understand the 4-step lower time frame process that I use to execute. It doesn't require indicators. It doesn't require fancy candle patterns. It doesn't need engulfing candles or indicators or EMAs or lines or any of these things. It doesn't need any of these things. All it needs is a break, a retest, an absorption, and then you pull the trigger. So let's break this down. It needs a break. It needs an optimal retest, and I'll go over what that means. It needs a liquidity absorption, and then you need to pull the trigger. These are the 4 steps that we follow. This is the Bolt breakout blueprint. And so how do we do this? So first, I will look for a break outside of my level. And so how I find a break is I will look for the first body that I see outside of the zone. So for me, it would be either this one or this one. Now, if I'm being honest, I actually chose this one because for me, I prefer seeing a bullish body. Now, I do not base any of my trades and entries specifically off candle bodies. I do not care how candles look. I'm not interested in candles. I'm interested in the price action. Those are not candles. Candles are just pictures. I'm interested in the price action inside of the zone that will give me confirmation. Okay? Now, once I've gone through that, or once I've kind of done that, I will then look for an optimal retest. And for me, an optimal retest has to have at least 2 things, right? It needs to have at least 2 candles coming into the zone. So for me, it's actually 1, 2, 3. So this is good. And price needs to cover at least 50% of the level. So what that means is this was actually 95. This was 73.95. Mind my handwriting here. And this was 90 down here. So what you can see is this price came all the way down to 92. So this is more than halfway. So that ticks that box as well. So that's how I find an optimal retest, right? I want to see price coming in at least 50% of the level, and I want to see at least 2 candles. That is an optimal retest. After I've seen an optimal retest, I want to see what's going on inside the level. So we've established that here. I wanted to know what was going on. And this is what's most interesting. This here is a classic rejection. The traders call this all sorts of things, engulfing this, hammer, candle, whatever you want to call it. But in reality, all it is, this candle here, is a liquidity absorption, right? Let's break that down. What was going on here, right? This is a classic example of liquidity being absorbed. What was going on here, right? So 615 for 364, 444 for 252, right? All this aggressive selling over here, right? All of this aggressive selling here, right? Were they successful? Were these sellers actually successful? Were they able to drive price lower, right? Were they able to break price below this level? So here, right? Here, basically. Were these sellers here able to break price below the level? Well, not really, because we actually came across our break line. Does that make sense? That's why we have a break line. So this is the first thing I look for. I look for a break. I look for an optimal retest. I want to see the retest and liquidity being absorbed. As soon as we get past this break line, I will pull the trigger. And that is the BOLT. That is the Bolt breakout blueprint. And it is the only entry model that I use on the lower time frame to execute all of my trades. I want you to use the same. I want you to invest into the Bolt breakout blueprint, right? And I even have an SOP checklist on this. So break line, right? 5. For me, that would be 5 out of 5, right? Optimal retest, quality of pullback, at least 2 candles, at least 50% into the zone. Yes. So I would label that as 5, right here. Next thing is liquidity absorption, right? Evidence of opposing orders being absorbed, right? That is a very clean example, right? Tons of aggressive selling, no reward. And then the final thing is, did you pull the trigger on time? Right, this is the other thing. I see so many traders, they get into trades too late, right? You want to get into trades as soon as the absorption has happened. That's why I created the break line. So you want to have your stop where the 0 is. That's why detecting zeros are so important. You want to have your stop there, right? And from there, my initial target or my average target where I got out was actually around here. So about a 2R risk reward. Fantastic trade, right? Fantastic trade using the blueprint. Okay, so that was the entire blueprint. Of course, my execution was here. You know, there was my execution, and I kind of exited here for $1,068. And so this was basically the 4-step process that I wanted to break down in this video, right? Being able to catch trades like this comes down to good positioning, good reader price, good market proof, and then a precise entry model to help you execute with the right information.
I've made the process before profits guide. It's completely free in the description. Go and grab it. And if you're at the point where you want to build this with me directly, one-to-one, I work with a few traders directly at Price Action Labs to help them achieve just that. So there will be a link in the description or in the comments to apply for a free one-to-one acceleration call. If that's a good fit, I look forward to seeing you there. Back to the video.